This is Sean Hyman from MyWealth.com, and I want to talk to you about today's topic and how I came to derive that the Australian dollar is really the place to be right now. You know, as the economy, you got to think ahead, and as the economy starts to recover, you have to start thinking what could benefit the most. What should I start positioning myself to be in the currency market? And so let's take a look, and I'm going to show you my reasoning as to why I think that people should look seriously at the Aussie dollar. So let's go ahead and get started.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you today about why the land down under is hopping to the top. Which currency has the best prospects for recovery as a global recession begins to wane? The answer is seen by digging into the fundamentals of each country, because money will first go where the fundamentals seem the safest. Why? Well, you've got money managers, and they have to answer to their bosses and CEOs as to why they made investments in XYZ currency. These guys put on literally what's called yards, which are billions of units of currency. So you'd better have darn good reason, and it better not be any fluff. So therefore, the most fundamentally sound currencies in their countries should flourish first. On the next slide, you'll see why Australia is hopping over everyone else economically and why I say this. You know, at the far left, you see the central bank rates for all the major economies. And you'll notice that Australia is at the top of the list with 3%. Now, why is that important? And I go into this in more detail in the written blog, but money seeks yield. And so the higher the interest that somebody can earn on their money, the better. The lower, the worse. So that's why money in stable times, or in times that are about to becoming stable again, will run to higher interest rate yielding countries. And who doesn't want to earn more money on their funds that they have somewhere? So this is one of the big appeals. Money chases yield. On the middle graph, we see inflation as noted by the CPI year over year, and inflation is the highest of the major economies in Australia. It's at 3.7%. So now, why is that important? Well, inflation has to be tackled. And how do you tackle inflation? One of the greatest tools that a central bank has is to raise interest rates. Well, if you raise interest rates, also investors get a higher yield on their money. And so they like high yields and rising yields. And so high inflation brings about higher interest rates, and money seeks yield. So therefore, that's why it works in their favor. The far right graph is real GDP growth, and you'll notice that Australia is literally the only major economy of the world, major industrialized nation, let's put it that way, that even has a positive GDP growth. It's at 0.3%. So you'll notice that all the others are either slightly negative or majorly negative, like Japan. And so this is something that will work in its favor. So you've got economic growth, albeit small. You've got inflation, which will spur higher rates in time, and you've got a decent yield in the interim. So these are reasons why the Australian dollar will prosper. So whether you're a short-term intraday trader, swing trader, or long-term investor in currencies, you should trade the most fundamentally sound currencies first. Therefore, if an institution gets a buy signal on several currencies, and the Aussie is one of them, they're going to take it first. You see, it's like getting buy signals on two stock charts. One company makes money and is expected to have their earnings growth expand. The other buy signal on the other company, they earn less money and they're expected to possibly lose money in the coming quarters. Which trade are you going to take? Well, currency investors are no different. They will pick the most sound, fundamentally currencies first. You know, here's three things also that I love about currencies over stocks. And I'm not anti-stock market, and everybody should have their stock investments and that sort of thing, but they should expand into currencies because there's many major benefits, three of which are these. Major currencies won't go to zero like a stock can. That's very important in times like these. Number two, currencies tend to recover quicker than stocks and stock indices. That's important as well. And number three, there are no commissions, just spread costs, unlike in stocks where there's a buy commission, a sell commission, and a market making spread. In currencies, you just have the market making spread. So I'd encourage you to check out our courses online at www.mywealth.com. You can see I've highlighted the courses tab. That's where you can find the courses, and also at the bottom the enroll button. You'll see these courses are only $19.99 and have a money back guarantee. And if you'd rather call and inquire about more information, you can see our number there at the upper right, 866-257-9677. So here's our number once again, 866-257-9677, and our general email, sales@mywealth.com. So check us out today.
Hope you enjoyed that today. I encourage you to check out our courses. You can go to mywealth.com, click on the courses tab, and order your course today for $19.99. It also comes with a money-back guarantee. You'll also notice there's a number on that website and also at the bottom of today's blog, as well as an email address. So if you have further questions, you want to shoot us an email, you want to talk to somebody on the phone, live and in person, go ahead and do that. We'd encourage you to do that because we want you to get educated in a new market. A lot of people really have gotten hurt in stocks and even in their commodity investments, and they need the addition of currencies to help buffer these down times in a recession. So let's get started today. Thanks so much for attending.